On Point with Craig's Investment Partners.
The information provided here is general in nature and it's not financial advice. It doesn't take into account your situation, objectives, goals, or risk tolerance. All investments are subject to risks and none are guaranteed. Before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services or to view the Craig's Investment Partners financial advice provider disclosure statement, please visit our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. G'day team, hope you're all well. That's another week behind us, and there's not too many more to go, is there? We've got this week, that's a full week. Next week, that's a full week. Then we've got a 3-day week in the lead up to Christmas, and then we've got a 3-day week to close out the year in the lead up to New Year's Day. So 16 trading days to go. We are nearly there for 2025. Last week was another pretty solid one. The S&P 500 index in the US eked out another solid gain. It was up 1/3%. That sees it on track for its 8th consecutive monthly rise and sees it only just below those October highs. Other markets were mixed. We had the FTSE 100 down 0.6%. European shares were up 6%. Emerging market equities had a good week. They were up 1.4%, and emerging market equities are the best performer of the major markets this year, up almost 29% in local currency terms. So emerging markets have been the place to be in 2025. The Aussie market added 0.2%, and the local market here, the NZX 50, pretty much flat to close out the week. Japan's been interesting. The Topix index fell 0.5% last week, but Japan has been in the spotlight lately. We've seen a lot of reports that are suggesting the Bank of Japan is set to hike interest rates later this month. Remember, the BOJ is on a slightly different path to everyone else. They had negative interest rates for a long time, and they've been very slowly increasing them. And while other central banks around the world have reached the top of the hill and have come down the other side for the most part, or are still coming down, the BOJ is still in that process of normalizing interest rates back to higher levels. So people didn't think we would see a cut in December, but now they do, and a 25 basis point move would take the policy rate to 0.75%, which is incredibly low when you compare it to what we've seen in the US, here in New Zealand, across the Tasman, anywhere else. But in Japan, going from 0.5% to 0.75%, that would see it at the highest level since 1995, since the Warriors came into the NRL. So that has been a long time, hasn't it? 30 years. We saw the Japanese 10-year bond yield rise to almost 2% on the back of that, 1.94. I think it closed out on Friday. That's the highest we've seen since 2007. And you also saw the yen strengthen against most other currencies, and you saw equities come off the boil. So we will be watching Japan over the balance of this month to see how things play out. Interest rates, the 10-year US Treasury yield increased slightly to 4.14%. Here in New Zealand, the 5-year swap rate rose 6 basis points to 3.48%. That has continued since that RBNZ meeting last month. Looking back at some of the key data releases, and we got the ISM indices in the US. The manufacturing sector was soft, the services sector was solid, so that has been the story of the last year or two, to be honest. The manufacturing ISM slipped to 48.2, a 4-month low. New orders pretty sluggish as well. The prices paid index little changed. That's not a bad thing, because that tells us that inflation pressures are only limited. Better news, the services ISM was stronger than expected. It rose to 52.6. Remember, 50 is your break-even point, and that was in contrast for a slight decline. So we got a positive surprise for the services ISM, which is now at its highest level since February and comfortably in expansionary territory. So that is encouraging. These days in the US, the services sector is a much bigger part of the economy. So that's, I suppose, the way you want it to be. Across the Tasman, we had some economic growth figures, a little disappointing. GDP was a bit softer than expected in the September quarter. It increased 0.4%. Expectations were for 0.7%. A little bit of a disappointment there. On an annual basis, the growth rate accelerated from 1.8% to 2.1%. So that's the highest in 2 years, but it was still a little bit below forecast. So the Aussie economy, as I said last week, I think is at an interesting juncture. You've got inflation that's at 3.8%. 0.8%, above forecasts, highest in almost 18 months. And the economy is still solid, so expectations for further rate cuts have really dried up. I am hopeful that looking ahead to next year, you will see inflation come off the boil a little bit, and we will see the RBA be able to do something on the easing front next year. Here in NZ, we got some dairy prices, and not great news. Prices continue to slide. The global dairy trade index fell 4.3%, which is its 8th consecutive decline, the biggest fall in 3 months. So prices are now more than 20% below where they got to in May. They're off about 13.5% this calendar year. A big driver of the price weakness has been growth in milk supply. Here in New Zealand, Fonterra has recently revised up its forecast collections, so there's more supply, a better season in terms of volumes, and we've also seen that out there across the world from the other big dairy regions too. So I think that is something that is a little bit more comforting to offset what we're seeing on the pricing front. I'd be more worried if prices were coming down because demand was drying up or falling, but prices are coming down because we've just had a good season and other parts of the world have too. So that at least softens the blow a little bit. Looking ahead to this week, and it will be a busy one, the focus will be on central bank decisions. The main event will be the Federal Reserve on Thursday morning here in NZ, but we will also hear from the Reserve Bank of Australia on Tuesday, the Bank of Canada on Wednesday, and the Swiss National Bank on Thursday. So we won't talk about all of those, but the Federal Reserve will be very much the highlight. Now that decision, and it's the last one for this year, the last of 2025, that will be released at 8 o'clock in the morning on Thursday, New Zealand time, and it will be followed by a press conference 30 minutes later. So as you're rolling into work on Thursday morning, having your morning coffee, you can tune in and watch Jerome Powell if you are that way inclined. I certainly will be. Very much a highlight for me, the Federal Reserve press conferences. Markets see a more than 90% chance that we'll get a 25 basis point rate cut, even though it was just a few weeks back that those odds had slumped to about 30 or 40%. So we've seen a lot of movement over this last 3 or 4 weeks in terms of expectations about what the Fed will do. But right now, they see a very high chance of a cut. They would take the upper bound of the Fed funds rate. Remember, they do a range and they're at 3.75 to 4. So going down 25 basis points would see them at 3.5 to 3.75%. Now, more easing is expected next year. Markets see the policy rate at somewhere around that 3% mark. So we're already done here in New Zealand, we think, with our OCR, but the Fed still has a bit more work to do. So that gap that has opened up should close. The other interesting thing about this meeting from the Fed is that we will get a new SEP, Summary of Economic Projections, and that's the first that we've seen since mid-September. So this will provide us some insights into how the Fed sees next year playing out. The SEP is what has all their forecasts, so we'll get to see what they think. Something else that I'll be watching really closely is to see how many dissents there are and in what direction, because the Fed will vote on this decision. It's highly unlikely to be unanimous, almost no chance that it will be unanimous unless someone's had a real change of heart in the last little while. So I expect us to get dissents in both directions. So there'll be someone out there saying instead of cutting we should have increased, and there'll be someone out there saying instead of cutting we should have held the line. Who knows? But that will be something we'll be watching closely. So that's on Thursday morning. 2 days ahead of that, we will get the RBA decision across the Tasman. That is out at 4:30 p.m. New Zealand time on Tuesday. Highly unlikely that we'll see a cut, with inflation where it's at and with the economy looking pretty robust. The RBA cash rate at 3.6%, so that's materially above where we are. We're at 2.25, they're at 3.6. They have come down a little bit. They were at 4.35 at the end of last year, so they've come down a little bit, but not nearly as much as we have here in New Zealand. So we'll have to wait and see what the RBA says. 2 days after that, in Australia, we'll get the November labour force report. So that is out on Thursday, 1:30 p.m. New Zealand time, the Australian labour force report. Now, a month ago, we saw a surprise drop in the unemployment rate. Went from 4.5 to 4.3. People didn't expect that. If I had to guess, I'd say it might push back up again this week. Right, what else will we be watching? Here in New Zealand, we will get the September quarter manufacturing survey. That will be of interest. I think that is out on Thursday morning. It'll be out at 10:45 a.m. And this is another GDP partial. And what I mean by that is it's another piece of information that feeds into the GDP report. So we had the retail sales figures for the September quarter a couple of weeks back. Last week we had building volumes. Now we'll get manufacturing. So these things all help the economists out there form a view of what the GDP report will look like for us when it comes out next week, I think on Thursday, isn't it? Thursday the 18th. Now, the Reserve Bank has been picking 0.4% for the quarterly increase, which would be quite good compared to what we've seen over recent quarters. But I think it will turn out to be higher than that because the retail sales report and the building volumes last week, they were both better than expected. So if the manufacturing one is also better than expected, that does point to a stronger GDP report next Thursday. And that would be a good thing because we want to see the economy recovering. What it would also probably do is firm up that view that the Reserve Bank has done in terms of its OCR cuts. So that will be interesting this week too. We might also have migration. Have we got migration? Yeah, we've got migration. We've got the ANZ truckometer. We've got electronic card transactions. We've got the BNZ manufacturing PMI. So lots to watch over Wednesday, Thursday, Friday here in New Zealand. Can you hear that dog barking in the background? Apologies if you can. I'm surrounded by dogs. I live next to a park and there's always people walking their dogs. 3,000 dogs a day come past my house. What else we got? On the earnings front, there are a few things to keep an eye on. Several international companies worth monitoring. We've got Oracle. What day is Oracle? That's on Monday, so that'll be in the US. Adobe. On Wednesday, we had Salesforce last week, so we'll have Adobe this week. So Oracle on Monday, Adobe on Wednesday. On Thursday, Broadcom and lululemon. So a few bits and pieces to watch. That's all US time. So here in New Zealand, it's a day later, I think, in terms of the US timings when I'm talking about US economic releases or corporate earnings announcements. So that's how the week is shaping up. It'll be another interesting one. The Fed will be the highlight, and we'll be watching to see if we can finish the year in strong shape. So thank you for listening. Enjoy your week. We'll talk again soon.
For more insights, visit craigsip.com.